We will do a theoretical lesson today, so you will understand all the price action we need after 10 years experience. I will start with a simple SR Philip line. What are the common support and resistance Philip lines? We traders enjoy combining price action with smart money concepts. The previous day, week, and the months are very important price levels. The low and high points are great and natural location of SR Philip lines as a start. If you trade much smaller time frames, you can also add common candles to this, like the 4 and 1 hour highs and lows. These can act as support and resistance Philip lines also. Then, what we look for is the multi-level imbalances, generally colliding with SR Philip lines. I commonly look for 1, 2, 3, 4 are multi-level imbalances. But I also try to check 15, 30, and 45 minutes altogether for sometimes micro scalping. As you notice, I keep adding more confluences to my setups for better trade locations. This is how I find overall trade locations. This too is very important. So, you noticed this price section and found yourself a great trade location. Then you need to ask this question. Do we have any reasons, to go higher and higher? Do I have a target above? For example, I like institutional targets, such as previous day, week, and the month high location. For micro scalpers, the high of 4-hour candle also can be a great target as well. Furthermore, if I see any kind of equal highs, it will give me extra confidence on my targets. And finally, I always try to combine liquidity points like these ones with imbalances for much better targets. These are great price magnet locations. They are pulling the price. So what do I have here again? First, I find myself a great trade location with SR Philip and imbalances. And then I ask myself about targets, like the clear targets above a combination of liquidity with imbalances. These are the two major steps before taking any kind of trades. Okay, now I am ready to take trades. What can I do? First of all, as day traders or scalpers, do we have any kind of inner imbalances in the area, in the lower time frames? Like the 5-minute, 3-minute imbalances. This will give me an extra confidence. Right before my entry is the price sweeps any sort of inner liquidity. This is really important for fuel. You already know that the imbalance and liquidity combination is the main drive and fuel of the price action. After all this, I'm all set for trading. Now let's talk about the trading models. The first method will be the classic 2-hour quick setups, the market structure breaks with imbalances. The most classic way of trading. You already know this, I know. But these trades should be extremely compact and quick. In and out, in and out, in and out. So what else do we have? I actually hate waiting for the market structure break like most of you. Then instead, without market structure break, I can build a small average in my entry location. Basically, what you do here, place multiple small limit orders into your entry area, creating yourself an average, another version of quick scalping. So basically, what is the point of what we do here? In our entry area, we actually looking for a small PO3, the power of 3. Accumulation, manipulation, and the expansion. I hope that you get the main idea here. Now the problem we encounter so many times, price sometimes never stops here and keeps dropping and dropping and dropping. This can happen actually anytime since we do not have any kind of 100% working strategy. I also say this million times. We do not know the future, what will happen, we have no idea. Then, in this case, you need to wait. Wait for the stronger momentum. Let the price go first. Let it make the first MSB, the market structure, break. So idea here is skip the MSB and wait for the first break of structure, the BOS, and then start trading. Because this time price is more likely to hunt the targets above. This can give you more confidence and trust in the upwards momentum. Finally, the sniper trading that you all have been waiting for. Problem with sniper setups. They are actually not that common. It is not happening daily in my opinion. But I need to teach this because if you see one, take the trade. So, in our entry area, we look for a very compact version of PO3. An inner liquidity sweep with imbalance. This is how you find the sniper trading setups. So actually, this is a fractal concept. What happens here in your overall entry location, the trade location? A PO3 inside PO3, basically double PO3. Look carefully in my overall entry area. First, what we look for, what happens? First thing happening is price accumulates and then sweeps the liquidity as the manipulation. Then the expansion happens. You got this. This is the bigger PO3. Now, look what happens inside. A smaller inner PO3 happens. Smaller accumulation, smaller manipulation, and a smaller expansion. The sniper double PO3 setup. I will try to work on live example in the upcoming next videos. I want you to look at this price action here so you can get a better understanding of the price movements. First of all, this is a very important price level, the one we call institutional level, the previous day high. And I need you to focus right here on this part. Of course, you may ask this, what is special about this price level? We will talk about in a minute. And right below, we have this very clear and nice support and resistance flip, as you can notice. Okay, we are all set now. Let's discuss it deeper. I just opened the multi-time frames in a single layout. What you see on the right, 15 and 30-minute charts. I told you to focus on this level. Do you see why this level is very important now? Yes, it is a very interesting price level for us. So what do we have here? We have this great price zone at multi-imbalances. And secondly, we have this great, very close target, the previous day high. After all this, only just one question remains. How to trade this chart? Just zooming in the area with 3 minutes time frame. As a very classic trader, you can use the simple risk-reward system here, looking for a small inner structure shift with an imbalance. Maybe try to trade this kind of 2-hour compact setup. However, what scares me is this clear SR flip location below. As you know, price can easily fall further deeper here, and I have no idea if it can happen or not. Then what options do I have? Of course, setting small partial limit orders to create an average entry. This is a very nice approach for the traders who cannot achieve sniper-like entries. It is actually a more relaxed way of trading with less stress because you will have no fear of any kind of instant stop outs. I hope that all this makes sense to you. Now, what happens after the previous day's hunt? Price strongly breaks the level with high momentum. As you can see, buyers are still in control here. Basically, until I see a strong shift from the sellers, it is not easy to take short trades here. Masterclass students will know this as a reverse trading system, but reversals are hard, not easily happening all the time. Look what really happens here. Structure is clearly still bullish. Price actually holding on in this inner imbalance and the PDH amplifier level. This can give you another long opportunity. So the most important thing in trading is actually reading the price and its intention, rather than being stuck with certain concepts all the time. Always ask this question: who is controlling the price right now? Buyers or sellers? I want to talk about the very simple patterns that I look for most of the time. If your eyes can get used to these patterns, finding them is actually not really that hard. For example, you see an overall bullish momentum in the price in any chart. Price is obviously going up, and you're seeking entries in the bullish momentum. Then you notice something like this one here. Price makes a quick stop, sweeps an inner liquidity area, maybe tapping an imbalance. I call these the gas stations, the areas that price looks for the fuel by hunting the stop losses. But if you can see the same structure with equal lows, now it can be even better for you. This means a lot of stop losses in a single price level, a great source of good fuel. Furthermore, you can add extra confluences to these patterns, simple support and resistance flip lines. It could be like the previous day highs level, or maybe 4-hour stop, the high or low. Any significant flip level will make the entry area stronger. This is why I call these amplifiers in the masterclass. I hope that all these are very clear for you. Now, how to trade these? You can obviously use a risk-reward system, very quick scalps. Nothing wrong with these ideas. However, placing a stop loss could be troublesome because I do not know how much the price will fall back in the situations. Or you can try to build small averages in the fill zones, in the fill areas. Basically setting a series of small limit orders to create an average trade. Unfortunately, there is no clear choice here. You have to try both and decide for yourself. Okay, let's talk about a couple of examples. Now, what you see here is the Nasdaq chart, but it can be any chart that you can imagine. Bitcoin, Forex, gold, or even oil. The time is 9:30, the New York local open time. Probably the highest traded time in the world. On the left, we have the 1-minute chart, and on the right, you can see the 5-minute chart. See what happens here. Look carefully. A perfect equal lows, and right below them, there is the imbalance at the opening. Price fills up and starts a rally from this point. This is the moment of the market opens. Actually, it can be really hard to catch this at the market open, but the pattern is here as you see. Also notice the perfect SR flip location. This is actually the most perfect example of the pattern that I enjoy using a lot. Let me focus on the 1-minute chart alone from the market open. Okay, right after the market opens, then what happens? The same thing. Price sweeps an inner liquidity and taps the imbalance, fill up one more time. It is again an area of small SR Philip location if you notice. Then we continue. Price creates this inner trend liquidity and then it sweeps it all once and taps the imbalance. This gives you another field point one more time. After that, above, the same pattern happening again, but this time price not fully hitting the imbalance that I wish for. But look above. A perfect equal lows one more time with the imbalance. Also, the SR Philip location looks great. A perfect, quick scalp location. After all that, a similar structure one more time, but this time it fails. You ask why this is failing. Actually, this proves you that every single pattern in the world will fail from time to time, without exception. Nothing can stop this. What actually price is doing here, creating this larger trend liquidity if you notice. It sweeps all the stop losses, crushes into this imbalance with the support resistance Philip location. I think you got the overall idea here. Actually, this is a very simple pattern, but just your eyes need to adjust to see this. So, this is what I look for most of my trades or even investments. First, price sweeps a sort of liquidity if it can, taking out some stop losses. Then maybe hitting an imbalance or possibly a BPR, balanced price range, or it can be a multi-imbalance level. Finally, if I can see an SR Philip location or a masterclass amplifier could be amazing to support my entry as extra confluences. Again, it will not work all the time. It is impossible. Nothing works all the time. But this is a highly accurate pattern. It has a high accuracy, designed for the long-term results. Let's talk about Ethereum. What we look at here is the monthly chart. What do you see here? In a very large perspective, price just swept these lows and stayed as a swing failure pattern. Now it's kind of a reaction, kind of a bullish pullback. Right here we notice a price switch concept from the masterclass. Sellers fail and buyers react. They try to push the price up. What I want you to notice is this previous month high with a leftover imbalance. Please keep these levels in your mind because these are very important. When you drop to the weekly chart, you can also notice this about weekly imbalance. Very nice target as well. Maybe not the close term, but soon enough, I think. Now I want you to notice this previous week's high as well. Also keep this level in your mind because soon you will understand really well. Now I drop to the hourly chart. Can you see the price action now? Can you see what's happening? Above, you have this great target, a combination of previous month's high with the liquidity and the monthly imbalance as well. And at the bottom, we have this previous week high acting as a support resistance Philip location, also the masterclass amplifier location. But the big question remains here. Why Ethereum? Why this specific coin? What made this coin really special? I will tell you something. I had no idea about all the price action I just explained to you. Then you ask why this coin? Yes, the trick is the momentum layout with multi-level imbalances. Basically, I just used the ICT high time frame candles indicator to find out this coin. This indicator lets me find tradable assets quickly. After that, I am doing all the analysis. This is how you find anything tradable before anything. Coins, Forex, or even Nasdaq. This is how you select a good tradable assets. So the moment you notice the multi-level imbalance locations like here, Then you can open the asset and do the further analysis. Now let's go down to the lower time frames to discuss price action further in this specific location. Now our previous month high with imbalance remains above as our possible target. This is clear. We also have this previous week high support and resistance flip location with the multi-imbalance level from the momentum layout. So we are all set to trade. But look at these inner equal highs as well, another great inner target for us. Then at the multi-level imbalance location, you can see the inner structure shift, and then maybe a possible trade. All this is okay, I'm sure you're seeing all this, and all makes sense. But what is really happening here? What actually happens here, an inner PO3, the power of 3, a sequence-based price movement, accumulation, manipulation, and finally the distribution. Since many of you may have a hard time to trade this, I know that. Here, what else you can do? Setting a series of orders into the manipulation location, which actually happens to be a multi-imbalance location as well. Remember, I have no idea how much the price can pull back here. Since I have a clear targets above, then I can build the average. So, nothing overly complicated as you can notice. Let's continue to practice and adapt to different market conditions. For example, check this chart out. What do you really see? We have this previous week high above, a possible target for us to take out, right? Then below it, we have these equal high levels, waiting for us as liquidity. Then at the bottom, we have a very nice SR flip location if we noticed, support and resistance flip. It all happens at this nice 15-minute imbalance location. Then the rest of the price section is actually very simple concepts. Structure shift followed by an imbalance, then a possible 2-hour setup. Not bad at all. But how hard is to catch this trade? Are you sitting like 10 hours in front of your computer just for a single trade? Do you really know how hard it is to wait for a single entry all day long for hours? I think this is not applicable to all traders. Keep this in mind, we will get back to this situation again. So before that, I wanna talk about one more time what really happened here. First thing we did is, we looked for a possible targets. So we looked for a reasons for the price move up or down. We already know the previous week high above, that was clear. But also these equal highs made things better for us, a better target. Then we noticed the SR flip location combined with an inner 15-minute imbalance. What is it? This gave us an overall entry location to look for opening new trades. So after all that, what happened? An inner liquidity sweep right above the imbalance and SR flip. And then the rest is smart money and price action concepts to trade. I hope all of this clear. Because these are the things that already you know really well. So what else can we talk about here? If you use the multiple time frames with the indicator, you will also see that this is the entry location of multiple imbalances. 30-minute, 1, 2, and 3 are imbalances altogether. All of this tapped at once right at the SR flip location. And all these are the things that you have been practicing for a really long time. But the trade entry is always a problem. Makes you wait for hours in front of the computer. Then what can we do about it? First of all, what do we really know here? First, we know that we have this lovely multiple imbalance location. This is a hardcore, real fact. Then we know there is this solid SR flip location as well. So if we will not use the risk reward, how can we enter this? Basically, simple cost averaging. First of all, I set a limit order to multi-imbalance location for the first possible pullback. Then I place a secondary limit order to a SAR flip location, because this is another key level. Lastly, I can place my order to deep liquidity levels way below. So in this case, I can create an average entry with 2 or 3 orders, as you noticed. No more waiting, no more snipers, no more sleeping in front of the computer. All you do is just set your limit orders to key areas, key level zones, and leave things be. Okay, today we will look at one of the students' trade, a momentum coin trade. We will dissect his trade from top-down analysis covering all the parts. Pengu coin was one of the top gainer coins on that day. If you start from the weekly chart, you can see that it is reacting to this weekly imbalance area, and right around this weekly SR flip point just starts a rally. Possible idea is clearing all the liquidity above. Very simple perspective. As you can see, nothing complicated here. When you look at the daily chart, you can see more things clearly. Inside the gigantic weekly imbalance area, you can also see that it reacts to the daily imbalance as well. What happens here is fractal movement, same price action with different time frames. Notice these lovely equal highs above, a clear target for us. And the longer relative equal highs as well. Right above, we have this leftover daily imbalance too. Altogether, great targets for us. So, what are the weekly and daily charts telling us? Bulls in general power here. We have top gainer coin, plus we have clear targets. If you just go back to the daily chart, you will also notice very important two things. Price attacking two institutional levels on that specific day. Previous day high with previous week high. More importantly, again, when all this happened, the day the coin was in the top gainers list. So it is not a random coin or a coincidence. There is a logic behind choosing this specific coin to trade. Let's go down to the lower time frames now. On the left, you can see the 5-minute real chart, and on the right, we have 6 different time frames at once in our chart. We can cover so many time frames with just a single layout to trade. Right before hunting the PDH, the previous day high, price makes this nice pullback into the multi-imbalance location. So this 5-minute area is POI, the point of interest to look for trades. Okay, all clear. Let me repeat one more time. First, you found yourself a top gainer coin. Again, this is not a random choice. There is a logic behind choosing this coin. 2. You found clear targets above like daily, weekly imbalances, liquidity points, institutional levels to hunt. 3. You found yourself a trade area with possible multi-level imbalances. Now, what really happens here? Notice what we have. Another micro SR flip location, which I love the most. And right above this SR flip area, a great liquidity sweep. Actually, a fake MSP. The masterclass students will understand this setup very well before hunting the previous day highs. We have a great setup with clear targets. I hope all this becomes crystal clear to you. Now, how can you trade this setup? You can notice this inner structure break, especially if you go lower time frames, and build a nice 2-hour compact setup. This is a very classic, a traditional way of trading which most traders use. But what if the price needs more fuel to go up? Maybe it will sweep the area a couple more times. After all, you, me, and no one else knows the future. Can we just set limit orders into critical locations and build yourself an average trade? Why not? I love building yo-yo style trades. What a great setup with full top-down analysis, guys. This is a A++ setup, which may not happen every single day, but I can say this clearly, this is a very educational video here. Another day in the Nasdaq market open, another great time to improve our skills in reading the market movements. Let's observe what happens in the market open and why it happens. Right before the market opens, you can easily notice this equal high-like structure here. It is not perfect, but it is an obviously interesting price level. And right above them are beloved imbalance to fuel the movement. And all happens at this SR Philip location. Notice how the supportive price level once broken downwards and now acting as resistance level. Finally, if you check out below, you can notice the open liquidity area as our target. Altogether, this system completes a full pattern. What was the pattern again? Let's remind ourselves. Mostly, I want my patterns to have clear targets like in this example, because targets give me more reasons for the price movements. And before any kind of entries, I also enjoy the price fuel up. It means that there was a hunt for all the stop losses before the big move. Support and resistance Philip lines are actually not essential, but I call them as extra confluence areas. It just makes trades much stronger and trustable. All these are perfect. But more importantly, there is a crucial thing that I look for. This is the reason I use this multi-time frame indicator called ICT high time frame candles. This indicator shows me possible trade zones. Like here, notice the multi-level imbalance zone at the market open. Since we trade the 1-minute charts here as quick scalpers, it is beneficial to look at the smaller time frames as well. Notice 4 different imbalances as one. An amazing price action. Actually, what happens here? PO3, the power of 3 but nothing else. Actually, all we trade is about PO3. We just add extra confluences for more trustable trade setups. Now, let's discuss what might happen at these multi-level imbalance areas. What can exactly see here? What is really possible? Most basic form is this. In the multi-imbalance area, price sweeps in inner liquidity and crashes suddenly. This is a simple form. The stronger version is the equal highs or lows version. Price creates these perfect equal levels right around the multi-imbalances and sweeps it before the big movement. However, what I see a lot, especially in the Nasdaq, is this. Multi-time liquidity sweeps, couple of fake sweeps, like here. Price sweeps the liquidity couple of times before the movement. Actually, it is not easy to spot this. This is why I like building cost averages around these areas, like the yo-yo setup from the masterclass. However, what is the common thing in all 3 these setups? All 3 versions are actually PO3. What happens here is simple. First, price accumulates and creates some stop losses. Then price hunt all those stop losses with the manipulation phases. In the end, the expansion happens, the big movement we expect. It is all power of 3, but just a little bit different styles. Let's see what happens in the Nasdaq later on. Let's get closer to the price action in this area. First, notice the multi-level imbalance area on the right with our indicator, which is also the nice SR Philip zone as well. These are the clear parts. If you carefully check, you can notice the price sweeps the inner liquidity multiple times in this example. But with each sweep, there are like 10-20 point reactions for quick scalping. However, many can feel complicated here. This is why I encourage you to build cost average in these areas. If you look at this here, an earlier multi-imbalance happens like the above one. Another SR flip location with multi-imbalance. But if you look at it carefully, again price sweeps the area multiple times. I always say this, for beginners, I think the best idea is building small cost averages in these trade zones with each liquidity sweep, instead of waiting for a sniper entry. What you see here is the Nasdaq chart in 1 minute time frame. This yellow line represents the New York Open 9:30 a.m. This is the time that highest number of traders trade the charts in the world. It generally takes like 5 to 7 hours window to trade, a heaven for day traders. What I want to look at here is a very simple pattern that we love to use. Notice this SR Philip point, followed by inner liquidity sweep in the location of an inner imbalance. This is the point of scalping. Now notice this another SR Philip point, followed by inner liquidity sweeps 2 times in this case, in the location of an inner imbalance. This is another point of scalping, multiple points of scalping actually. And the same thing happening one more time. SR Philip point, followed by inner liquidity sweeps, in the location of an inner imbalance. Again, multiple points of scalping. So all these give you a micro scalping opportunity to trade, quick trade chances like 10 to 20 point scalping. Now let me open the multi-time frame indicator on the right and see these SR Philip points, where it happens. Notice the first SR Philip point, a multi-imbalance point with 10 and 15 minute charts. What about the next? Again, a multi-imbalance point with 10 and 15 minute charts again. Look at the third SR Philip point from the 1 minute chart one more time. It is an imbalance point in the 10 minute time frames as well. So you see, Bitcoin, Ethereum, momentum coins, even Nasdaq. We do the same thing and following the very similar pattern that we always use. This is one of the most common patterns that I love to check out regardless of time frames or assets, looking for a possible SR Philip point, looking for a possible inner liquidity sweep, and looking for an inner imbalance. Extremely simple combo for my trades. And if this happens in the multi-time frame imbalance locations, it is even more amazing. You see, it is not that complicated actually. I want to look at the same chart with different perspective now. On the right, we have much higher hourly time frames now. Notice what happens here. First, in the 1 hour chart, you can clearly see this gigantic SR Philip location with the imbalance. And price holds in the area of imbalance. Look at the rejected candles and then rally starts. So what happens during the rally? Look at all the hourly candlesticks. High points of candles keep being taken out very strongly. Buyers keep pushing the price up and up, creating a momentum. So in the higher time frames, this is another way of confirming the rallies. In the higher time frames, you notice high point of candlesticks being taken out, one after another. This means that bulls are in the full control now. This is a bull party. While this happening, in the lower time frames on the left, you seek cheap, discounted entry points, small pullbacks, possible inner liquidity swap with SR flip locations. If you just observe the price action in all market, it doesn't matter, coins, stocks, indices, futures, you will keep seeing these similar patterns keep happening every day. More you practice, the clearer it will be. Let's get back to the real price action trading. In this weekly Nasdaq chart, please notice this previous week low level. It is extremely important for us. I made a mistake with the label, sorry, but you got the idea. Now I'm jumping from the 1 week to 1 minute. It is like an intergalactic light speed jump. What you see here, a market open day in the New York, 9:30 a.m. I want to show you the price action here. We start with this nice support and resistance flip line. Notice carefully, price rejects this price level twice. And then the level is strongly broken. Basically, it is flipped. This is why we call it SR flip, support and resistance flip. Some people call it break and retest levels. Actually, names are not important at all. Just focus on the price action. Once a support level now becomes a resistance. This is all the thing that you need to know. Now at this point, we are also watching our multi-level imbalances with our indicator. By using the ICT high time frame indicator, I can see the price action in higher time frames without switching between time frames at all. This makes everything much faster for me, especially for day traders and scalpers. You need speed and seeing things at once like this here. Notice this multi-level imbalance location here, which just collided with the support and resistance flip location. And if you look above, you can see the same thing happened before. So this is a pattern. What is a pattern? A pattern is a historical repetitive price action that guides us to take new trades. Very simple idea actually. Now we are all settled. But how can we trade this? Any ideas? Notice all the inner liquidity swap when the market opens at 9:30 a.m. What is forming here? Just look carefully. An accumulation, then the manipulation, and finally the expansion. Some calls them as distribution. Basically, the power of 3 concept, PO3. And do we have a target to look for? Yes, we have this nice previous week low waiting for us below. I think you got the patterns and concepts here. Please do not stuck with the names. Names are not important. What important is the reading the price action. So the one way of trading this, setting small limit orders into the special places like this one. Basically the possible manipulation area from the PO3. This is an educated guess based on the historical data, building positions slowly into the interest areas. Secondly, what happens here is actually a micro market structure break, but in my opinion, catching this is not easy at all. It happens so fast, there's no time to react to this and what is happening. Lastly, another option, noticing the inner bullish imbalances fail with the manipulation phase. Now I may try to jump with market order with sellers, grabbing some cash maybe. So why do we get in and out? Yes, we have this previous week low as the clear target below. And in this case, it is really nicely hunted. But is it a God-given rule? No. Did you know it was going to hunt the previous week low for 100%? Not at all. The truth is, you know nothing and nothing at all. Nobody knows the future. No one can predict the future with 100% accuracy. This is why you get in and out of trades as soon as possible. especially if you're a scalper or day trader. Another thing that you must understand is the ranges. What if this was a range? A range deviation above and the range deviation below. Maybe the price was going to move like this. Who knows? I do not. You must understand and accept the reality and the truth. Trading has become much harder in the recent years. Everything is extremely unpredictable in the short term, especially for day traders. You cannot just hold positions for a long time anymore unless you're a swing trader with much more higher time frames. Do you want to survive in day trading? Get in and out as soon as possible. Cut your losses. Never lose big money. Master the risk and order management, not the strategies. Most people focus on the strategies so much and forget risk and order management, which is actually much more important than the strategies. Let me dissect another great student trade recently taken on Ethereum. Very nice setup. He even drew some annotations on the chart just like I regularly do. All in all, this is a great setup. Now let me observe this trade using the top-down analysis, starting with the weekly chart. On the weekly chart, you can see a classic price action play out. An inner liquidity sweep with imbalance. A great source of price fuel to move in any direction. Please take note of the last week's high point, because it will come in very handy soon. Now I've dropped down to the daily chart. Here is how the daily action started after price swept the weekly liquidity and imbalance area. Notice what happens here. Price swept these equal lows right above the imbalance area as well. This is a fractal action. What happens on the weekly chart now happens on the daily chart as well. It is identical price action, and price keeps moving with the inner imbalances. Bulls are in control here. Now I am marking yesterday's high point. These are two very important institutional levels you need to watch all the times. Now we are on the 15-minute chart. Previously, we just got a sense of the overall bias of the price action. We know that on the weekly and daily we are quite bullish. On this chart, the first thing we notice is that we have two clear price action targets above. Last week's and yesterday's high levels, extremely close, a target just waiting to be hunted. We also have two possible support resistance flip points. If you carefully look at any chart, you can see multiple flip lines, many rejection points or supports. Both lines in this example are quite acceptable. Now, up until this moment, we made a great analysis. But how do we trade this? That is the main question. Trading is always a tricky business. Before taking any trade, we want to make sure price has enough fuel to move. Either liquidity or imbalance, or a combination of the both. You can notice the equal high price levels at the top and the bottom here. We have a very clear targets above now. There are many reasons for the price to go up. So what happens here is that the price sweeps the bottom equal lows and taps the dip into the 15-minute imbalance. If I had to place a risk-reward based trade here, I would want to cover all this imbalance in this example, because price may want to sweep the inner liquidity a couple of more times for extra fuel before the final move. Now what happens with the multi-time frame indicator? I suggest you always check the multi-time frames to get more confluences. You can notice 4 different time frames with 4 different imbalances provide the fuel we need. But at the same time, if you closely look at the multi-time frames, you can notice the 4 different vision of the inner liquidity sweep for the final move, where the price goes into lower support and resistance area. A magnificent movement actually. Let's get back to how to trade such a setup with another option. Now the problem is that price loves to sweep inner liquidity areas inside the imbalances. So instead of using a one single big order, you can follow the price and enter with small trades with each inner liquidity sweep inside the big imbalance zone. This will help you to create a nice average entry at the end. As you notice, finding setups is not that hard actually, but trading the setups can be quite tricky sometimes. You need multiple tools and options to handle trades like this. Let's observe a very specific price action happening in Bitcoin lately. Again, I will try to use a single layout so you can notice and feel all the price action on a single screen. First, notice this lovely line, a very specific support and resistance flip location. Carefully look at the price. It cannot break through this area at least 4 times, struggling to make a break. But at some point, this resistance is strongly broken, and the price bursts suddenly. So, what was once a resistance line now becomes a support line. This is what I call a flip. Others call it a break and retest, but names are not important. Just understand the price action. Now, if you look at the layout above, you will also notice that these locations become a very lovely multi-imbalance area, a specific price level with 5 imbalances from 5 different time frames. I hope that everything is very clear up to this point. Now, what else are we seeing in this price action? 2 specific masterclass amplifiers, the previous day's high and the previous week's high. These institutional levels are natural SR Philip locations which boost your trade ideas. This is a high quality pattern altogether here. Let me observe the price action in detail here one more time with a couple of additions. You already understand this pattern. Here are a couple of tricks for you. Notice the inner liquidity area building upside, and the swap liquidity area on the downside as well. All this happens at a multi-imbalance level, as you can see in the layout above. So, what is this setup at its core actually? A simple PO3, the power of 3. Accumulation, manipulation, and the expansion, some call it distribution. Classic combo of price action and smart money trading concepts. I have to talk about a very specific thing here. This is the PDL level, the previous day's low level. Just look at it carefully. Price is extremely close hunting the PDL. But it's also not far away from the PDH as well, the high level. Right at this point, if you try to take a trade like this one here, this is not a wrong idea. There are no wrong ideas in trading. There are only wins and losses. Please do not overthink about it. But there are a couple of problems that we know here. First of all, price is extremely close to the previous day's high and low at the same time, which makes the area a bit tricky actually. Then, if you look above, there is also an equal high structure above, open liquidities as well. But the main problem is different. What you see here is a triangle shape. Basically, there is no clear structure here. There is no trend. Orders accumulate for a long time without any downtrend or uptrend. There is no bullish or bearish structure. All the price is doing is just creating so many open liquidities on both sides, upside and the downside. These kind of trades are generally extremely choppy and tricky. The best action is to let the price action happen with clearer movements and then wait for the price to clear up before making a full decision. Otherwise, many times you'll be forcing trades. Let's continue practicing our day trading and scalping skills around the market openings. Since Nasdaq is the most commonly traded asset in the world, I will work on it. But you can also use this with any kind of assets like Bitcoin. Before we start, the market opens at an extremely important price level. This blue line indicates the previous month's high point, which is broken strongly, as you can see. And if you look at the 1-minute chart again, you can also see the inner SR Philip location, classic price action method. Then please notice this inner liquidity area created and how the price sweeps it. Now this is a very large sweep actually until the previous month's low area. Sometimes the sweeps can be this big. And at the top, notice the small inner relative equal highs as an inner target. And all this price action actually happens at the 5-minute imbalance area if you noticed it. Okay, let's look at the hourly charts above from 1 to 4 hours. Notice how the buyers took the control very early and starting to pushing the price crazy in the pre-market before the market opening. You can also notice the momentum imbalances which supports the bulls in this movement. Okay, let's make an overall summary here so you can understand the price action really well. In the pre-market before the 9:30 open, we know that buyers gained the control, pushing the market up. This is obvious. Then with the market opening, we notice this lovely inner support and resistance Philip location. It also happens at the area of previous month amplifier. It is a classic MASTERCLASS amplifier which I teach. Price sweeps the inner liquidity in the area, right above the SR Philip, also creates these relative equal highs above for us as an inner target. And all this price action happens at the 5-minute imbalance area. If you check out, you will also see the multiple lower time frame imbalances as well. Now, this is a perfect fuel point for any kind of rallies. Extremely good setup with real live action. Let's look at another day from the last week and observe the price action in detail again. In the pre-market, you can see the previous day's low sweep. But this time, there is no continuation here. Instead, price sweeps the area and reacts back so strongly. This tells us a possible reversal here. If you check the 1-minute chart in detail, you can see the price makes the market structure break, followed by the first break of structure. Obviously, sellers are losing power here, buyers pushing the price back upwards again. After the market open, you can see a very similar structure, a similar pattern in action again. First, the SR Philip area with 1-minute imbalance location, followed by the inner liquidity sweep location, leaving us an inner target with equal highs above. Extremely simple and classic smart money action happens here. And the price fills up here strongly, rallies. Let me do the quick summary. In the pre-market, price sweeps PDL and reacts. There is no continuation. It is not a forward trade anymore. It is a highly possible reversal now. After the market open, we notice a small SR Philip with inner liquidity sweep, and the price sweeps the area, fueling up, targeting its own liquidity above the small equal highs area. You see one pattern happens daily if you carefully look at it. Okay, we are on the same day, and bulls control the price obviously. Remember, we always try to trade with the dominant side of the current existing movement. If you check out here, another similar, actually same pattern happens. Our classic combo of 3-4 special moves together. It is like a game actually. Now I think you understood all this pattern and the strategy. Now one question remains here. Can we trade this area between? Well, if you carefully look at it, what are we gonna trade here? In my opinion, there is no concept here. Nothing I see clearly, to be honest. The only thing you can do here in this between area, probably jumping to a rally with a small order to grab some cash from the movement and the momentum itself. That's it. Today, let's talk about a crashing price that sweeps the liquidity in higher time frames. What can we do about it? What does it really mean? Imagine a very important liquidity level, a higher time frame liquidity level, or maybe an institutional level like previous day low. And you open the hourly charts. Imagine this is the 1 hour chart with 1 hour candlesticks. Price sweeps the important liquidity level. Then what will happen? How can we read this price action? How can we trade this? What you see here is 1, 2, 3, or 4 hour time frames together, basically mostly hourly candlesticks. Since we are day traders, hourly candles are really important. If you notice the price action like this one here, price continues to take out the low levels with strong breaks. This means still a weakness in the price. Seller power continues. Then, if you also see these big imbalance areas, the momentum is still strong in the downside, still favors the bearish power. At this point, the important liquidity level area can turn into a support and resistance flip location, basically a masterclass amplifier. I hope that all this part is very clear. But what if we see these large rejection wicks at the liquidity sweeps with multi-level hourly candles? This is the initial weakness for the sellers. It means that buyers are not happy with the sellers and trying to push back the price. A fight starts. And then if we start strongly seeing these breaks upwards, it means buyers finally try to take the control back from the sellers. Try to start a rally. A possible reversal will happen here. And watching the imbalances in the area will help you a lot. Failing bearish imbalances followed by a bullish momentum imbalances is just great for us as bull traders. Okay, in the hourly charts, we solved this price action. Then how can we trade this? This is the main question, right? You just start watching the minute-based candles this time. In the minute-based charts, watching the inner liquidity sweeps, these small sweeps, we can take them as small gas stations to fuel the price. And maybe seeing a couple of inner support resistance flip points will boost the entry points like this. And sometimes price will only boost it by just imbalances. It is impossible to know for 100% sure which will work the best. Okay, let's work on a real life example. This is a single layout chart. I just try to put everything in one chart so you can see all the price action here at once. At the top we have mostly hourly time frames from 1 to 4 hours. As you notice, on the left we have the 15-minute chart as a small guidance for us. And the bottom we have the minute-based charts. 1 minute time frame open to see all the long price action. And on the right we have the multiple minute-based time frames with 5, 10 and 15 minutes. This simple layout will allow us to see every price action with every time frames at once without switching between time frames. Let's start with the hourly chart and analyze the price itself. As you notice, price sweeps the PDL, the previous day level, the institutional level. Then watch what happens. Price rejects the area with large wicks. You can see it in all the time frames with hourly charts. There is no continuation. This is the first sign of the weakness in the trend. After that, what happens? Notice carefully. Price starts to keep taking hourly candle highs. A possible reversal in action here. Buyers taking the control back from the sellers and try to push the price up. And along the way, you can see the bullish imbalances appear, adding more confluences to the movement. So if this is a reversal, where is the price try to move to? Yes, a clear level above PDH, the previous day high. So right here, we have a massive rally. But how to trade this rally in action while it is happening? We watch all the price action in the hourly based charts until this moment. It is time to focus on the bottom part, the minute based charts, and talk about it. As you know, we observed the rally in the hourly time frames. Now let's observe the rally in the minute based charts. Same price action, same price levels. But now we use the minute based charts. Notice these small inner liquidity sweep areas in the 1 minute. All these small sweeps actually happen at the area of 5-minute imbalances if you carefully look at it. Remember, we are rallying towards the PDH, the previous day high, as our target. In these liquidity sweep areas, you can also notice the couple of inner SR flips as well, as extra confluences to push the price. So all these areas are extremely nice places to enter trades, or at least build some cost averages. And at the top, this last movement was almost perfect. A nice inner liquidity area created, just above the cool SR flip line, but just the price never swept the area, as I'm watching the price live. But with this general strategy and the main patterns, we can find so many entries. I think this video needs to be studied like 10-20 times. This is not a simple video. It teaches you how to read the price, how to understand the price, how to connect to the price. Completed the free trading course but still need more? My master classes teach liquidity, imbalance, and the market structure in detail. Combine them with forward and reverse trading using momentum superboxes and yo-yo cost average entry models. After that, you will master scalping with a one-screen free trading view indicator, a revolutionary trading system. Finally, you will learn to invest your profits using my 10-year swing investing with working agent system. Interested? Please see the video description.